I called it. I told you exactly where this stock was going, and the market followed our roadmap exactly. Welcome back to Smart Stock Sam. And today, we are going deeper into one of the most precisely traded, most technically accurate setups I have ever mapped out live on this channel. We are talking about Nebius Group, ticker NBIS. You already know the headline is massive. A historic government approval just dropped. Institutional giants are piling in at a scale we rarely ever see, and a short squeeze may be building right beneath the surface that could catch the entire market completely off guard. Is Nebius stock about to explode? That is exactly what we are here to answer today. And by the end of this video, you will have a complete step-by-step price target roadmap, every single catalyst laid out in plain language, and a clear picture of whether this is a real opportunity or just another neo-cloud hype cycle. Stick with me all the way through because what I'm about to show you will fundamentally change how you look at this sector. So let me take you back to February 22nd. On that day, I published a very specific technical roadmap for NBIS on this channel. I identified what I called the gift zone, a precise accumulation window sitting between $96.50 and $98. I said clearly that if the stock opened inside that range, the setup was live, and buyers should be paying close attention. And what happened? On Monday, February 23rd, NBIS opened at $96.31, literally at the bottom of our gift zone. Could that timing be any more precise? The stock immediately reversed higher, punched cleanly through the $100.87 psychological resistance wall, and kept climbing with real momentum. Then came the moment that genuinely gave me chills. On Thursday, February 26th, I had projected a hard mathematical ceiling at $108.32. That day, NBIS printed a weekly high of exactly $108.32 to the penny before reversing. Think about that for a moment. When a stock respects a technical level with that degree of precision, it tells you one very specific thing. Institutional algorithms are executing those levels. The big players were trading our roadmap. But here is where the story gets far more interesting, because just as that precision was playing out, a storm was building that absolutely nobody saw coming. On Friday, February 27th, the entire neo-cloud sector got completely blindsided. CoreWeave, one of the most closely watched peers in this space, reported earnings that sent shockwaves across every related stock. We are talking about widening losses, deeply disappointing revenue numbers, and forward guidance that spooked the entire market. Investors did not wait around to ask questions. They sold everything in the sector without a single thought about whether individual companies deserved the punishment. NBIS gapped down hard, opening at $98.70 and closing the day at $91.19. That is a 13.1% single-day collapse triggered by someone else's report. The move technically breached our stop-loss line at $93.28, which officially invalidated the short-term bullish setup from a pure charting standpoint. Now here is the question that separates genuinely smart investors from the crowd. Did anything actually change inside Nebius's own business on that Friday? The answer is an absolute and emphatic no, not a single thing. In fact, while the price was falling off a cliff, the company was quietly finalizing what could be the most consequential physical expansion in its entire history. That is what I call a structural discount, and that is exactly what the second gift zone represents. Here is what the market was completely missing while it was busy panic selling. On March 2nd, the Independent City Council officially approved Nebius's plan for its flagship United States AI factory. Let that sink in for a moment. While traders were dumping shares and running for the exits, a city council was voting yes on the kind of infrastructure that will define the artificial intelligence landscape for the next decade and beyond. And the scale of this facility is genuinely staggering. We are talking about a 1.2 gigawatt power capacity, 1.2 gigawatts dedicated entirely and exclusively to artificial intelligence compute. To give you real context for that number, that is enough electricity to power hundreds of thousands of homes, and every single watt of it is going toward building AI infrastructure at a level that competitors simply cannot match overnight. The campus spans 400 acres. Over the next 20 years, it will inject $650 million into the local economy through tax payments alone. They have also engineered a closed-loop cooling system that ensures zero impact on local water supply and power rates, which means the surrounding community sees direct benefit. Regulators have no ammunition to push back, and Nebius is essentially locked in politically for the long term. While the stock was sitting in the discount bin, the company was pouring the physical foundation for a full decade of infrastructure dominance. But the facility approval is only one piece of this picture, because without the right financial backing, even the most impressive infrastructure is just concrete and cable. So let me ask you a serious question. What happens when the world's largest asset manager decides to go all in on a company that the rest of the market just panic sold into the ground? You stop scrolling and you pay very close attention. BlackRock, yes, that BlackRock, has built an $800 million position in NBIS. That represents a 39,418% increase in their holdings. They were not dipping a toe in the water. They bought the entire pool. State Street Corporation reinforced that conviction by increasing their own position by 2,391%, adding 3 million shares. Capital Research Global Investors went even further. They did not even have a position before this and simply walked in and initiated a brand new 2.7 million share stake completely from scratch. These are not speculative bets from retail traders chasing momentum. These are calculated, large-scale institutional convictions backed by teams of analysts running deep, fundamental research. And then there is the partnership that changes the competitive dynamics of the entire space. Nvidia did not just provide $700 million in strategic funding. They are reportedly offering Nebius a $20,000 per unit discount on their highest-end GPUs. Every other neo-cloud provider pays full price. Nebius gets the discount from the king of AI hardware. That is not a partnership. That is a structural moat that competitors cannot easily replicate. When the smartest capital in the world is accumulating while everyone else is selling, you have to ask yourself very seriously which side of that trade you want to be on. Now let us answer the one question every serious analyst asks about AI companies. Where is the actual revenue? Because enthusiasm and headlines do not pay the bills. Nebius has already answered that question with a $20 billion secured backlog. These are not soft verbal commitments. These are 5-year infrastructure contracts signed on the dotted line. Microsoft has committed over $19 billion. Meta has put up $3 billion. That is sustained, contractually guaranteed cash flow locked in for the next half-decade before the Missouri facility has even processed its first workload. But here is what truly sets Nebius apart from every other infrastructure play in this space right now. They are not just renting hardware, they are actively building a complete agentic ecosystem. The acquisition of Tavaly brings high-margin agentic search capabilities directly into the platform. The integration of tandem layers, human expert oversight into AI workflows in a way that creates genuine stickiness. What they are building is not just the skull, they are building the brain, and a company that layers recurring, high-margin software revenue on top of commodity infrastructure commands valuation multiples that pure hardware providers simply cannot reach. Which brings us to the most important question remaining: what does the price do from here? As of March 4th, stabilization is actively happening. The stock tested an absolute floor at $83.53 on March 3rd before buyers stepped in with conviction and closed it at $86.80. We are now watching shares push back into the $91 to $93 range as the broader market slowly begins to digest these massive catalysts. Here is your complete technical roadmap going forward. The current accumulation zone sits between $88 and $91.50. Immediate support lives at $87.35, with that recent floor at $83.53 as the hard line beneath that. To the upside, two major hurdles stand in the way. The 200-day moving average at $93.87. Break that, and we immediately test the 50-day at $96.85. Clear those two together, and the path to the $100 psychological wall and our previous precision ceiling of $108.32 opens up cleanly. Wall Street's consensus price target currently sits at $143.22. And Northland Securities, who runs serious, thorough analysis on this space, recently named NBIS a top pick with a price target of $232. Now add this final piece to the picture. Currently, 18.67% of the float is held short. That is nearly 40 million shares that will have to be bought back at some point. The days to cover ratio sits at 3.63. Smart money is already positioning ahead of the move. Heavy call accumulation is being tracked at the $90 and $95 strike prices, indicating traders expect a rapid and significant recovery. Any single piece of positive news, an earnings beat, a new hyperscaler partnership, a capacity update from Missouri, could light the fuse on a short squeeze that sends this stock vertical faster than most people will be mentally or financially prepared to handle. Could we see a move that leaves the bears completely flat-footed and stunned? Based on the institutional positioning, the revenue backlog, and the physical infrastructure now officially approved, the probability of that outcome is far higher than the current price suggests. Before we close out, I want to be transparent with you the way I always am on this channel. Nothing in this video constitutes financial advice of any kind. I am not a licensed financial advisor, and everything shared here is strictly for educational and entertainment purposes. All investments carry real risk, including the possibility of losing your entire principal. Always conduct your own thorough research and consult a qualified financial professional before making any investment decision. Past technical accuracy does not guarantee future results under any circumstances. Please invest responsibly and never risk capital you cannot afford to lose. With that said, here is the complete bottom line. The breakdown on February 27th was not a reflection of Nebius's fundamentals. It was an externally driven sector panic that handed long-term investors a rare and significant structural discount on a company now anchored by a historic Missouri factory approval, a GPU cost advantage courtesy of Nvidia, an $800 million institutional conviction from BlackRock, and a $20 billion revenue backlog that competitors are nowhere close to matching. The second gift zone is real. The spring is coiled tight. The question is simply whether you will be positioned when it finally releases. I want to know what you think. Leave a comment below telling me, with all of this institutional accumulation happening while retail sentiment is still nervous, do you believe the smart money has already priced in the full upside, or is the biggest move in NBIS still completely ahead of us? Drop your honest take below. I genuinely read every comment on this channel. If this analysis helped you see the setup clearly, please hit the like button right now. It takes 1 second and it helps Smart Stock Sam reach more investors who need this information. And if you are not subscribed yet, hit that subscribe button and turn on the bell so you never miss a breakdown like this one. I will see you in the next video.